Canadian federal election day fast approaching, and it's going to have implications for the Canadian market amid this trade war. We're joined by Rob Lauzon, Chief Investment Officer at Middlefield Capital Corporation. Great to see you, Rob.
Yeah, good to be back.
I know it's hard to separate things out, but what are your thoughts on the election? I mean, the polls are pointing to a Liberal victory. Do you think the market would be disappointed if that happens?
No, I think the market wants change. If we're talking stock market, they want certainty, they do want change, they want better pro-business policies. And the Liberals quickly took a lot of the conservative platform. And, you know, rightly so. What's working with voters? The Conservatives had a 20-point lead. The positive is, whether it's Mark or Pierre in, it is a drastic change from what we felt over the last 8 to 9 years. And I think the big important point is whoever wins, you're going to get more fund flows from foreign investors coming back into Canada, which helps our stock market. And then, as I think you mentioned on the preamble, I think you're talking to Pierre Poilievre later today, but his new idea of just having investors, Canadians, put money back into Canadian stock and bring taxes down, save capital gains taxes is a brilliant idea. So I think either party will be a net positive for Canada. There's some small, idiosyncratic differences at the energy level, and we can get into over the show, like emission caps are still on from the Liberals. If you really want to bolster GDP in Canada and have us have one of the we would have a faster GDP growth rate than the US if we were allowed to produce 6 million barrels a day of oil. With the emission cap, we can't do that. But there's a lot of untapped potential in Canada. But I'm bullish for the second half of this year. We need to get the clearing event of tariffs, but more importantly for Canada, the election behind us and move forward with a pro-business government and start getting dollars back into Canada.
The tariffs are impossible to read. I mean, who knows what Donald Trump's next move is going to be? But do you see some sectors, for example, that you feel have been unfairly beaten up amid this trade war?
Definitely 2 weeks ago, I felt Canadian energy was unfairly beaten up. They brought the tariffs down to 10% on energy. We'll see what they do on Wednesday. But I think when you look at the fundamentals and just logic, the U.S. needs Canadian energy. So there was a point in time when CNQ was $40 a share. It's probably 10% higher or so now, but it was so depressed. And when you what's come out of Trump's rhetoric in the last 3-4 days has been even more positive for Canadian energy, because he's threatening more tariffs on Venezuela, which is the only other source for heavy crude that the refiners in the U.S. need. And now he's threatening more sanctions on Russian oil. And he's threatening on bombing Iran over the weekend again. So all these external sources of global oil supply, and some of it coming to the U.S., can only be met by a friendly position towards the 3 million barrels a day plus that they get from Canada every day, which is needed. So I think Canadian energy is unfairly punished. I'm sorry to interrupt. We just showed CNQ. I think we showed the New York price. Maybe we can show the Toronto price. Yeah, that's what I referenced.
Would you? I think that's what you were referencing. The Canadian price. Would you say CNQ is a decent buy right now?
Yeah, it gives you exposure to natural gas, which we've got LNG Canada coming on in a couple months. It gives you some of the lowest cost production of oil and natural gas. It gives you reserve life, longevity. They've got, I think it's over 40 years of reserve life in their oil sands.
Wow.
It's more if you include, the probable reserves. It'd probably be 100 years of oil. And one day the U.S. producers are going to need that when the Permian starts to run out. So there's a lot of deep value in CNQ shares. And they've raised their dividend, over 20 years, every single year, even through the great financial crisis,
Never
through COVID.
I don't think.
No, so it's just a phenomenal stock to get to total shareholder returns. The management is quite aligned with shareholders.
What about REITs? Now, I know that's a very broad category, everything from residential through to data warehouses, but or data centers. But what's your view? Is there value in real estate right now?
Yeah, there's a big disconnect between where transactions are happening, and I'm talking commercial real estate, so whether it's apartments or the sheds, the industrial warehouses you see by the airports, whether it's the senior retirement homes that your grandparents are in. In the public market, they're trading, many of those sectors, including the Shoppers Drug Mart, the retailers, are trading at about a 20% discount to NAV. But when one of these public REITs sells a property, they're selling it at NAV, some instances above NAV. So there's a big 20% disconnect of where the stock market is treating REITs versus their intrinsic value. So, in this volatile few weeks we've gone through, when you look where is some of the safest areas to put money in the market, in our opinion, it would be a REIT that has full occupancy, has greater demand than supply for their assets, and that would be the apartment REITs in Canada. They were unfairly hit when Trudeau changed the immigration rule and decreased the amount of immigrants over the last 18 months. So foreign investors, US investors in our REITs exited Canada, and it's a small cap, mid cap sector. So that amount of money pulled out so quickly drove these stocks down 20%. But when you meet with management, they've got over 95% occupancy. They're still able to raise rates mid-single digits overall on their portfolio. They're raising their dividends. They're buying back stock. So if they sell an apartment for $400 million because that's their NAV of that apartment on their balance sheet, but implicitly in the stock price, it's trading at $300,000. Given that it's trading at a 20% discount, they're actually selling apartments and buying back stock in the market and kind of arbing their.
Sure.
In theory, they would privatize themselves if they did that over and over and over.
Which company are you talking about? Canadian Apartment REIT?
The biggest, most liquid, to talk to investors, it would be Canadian Apartment REIT, CAR.UN, and we really like that stock here.
Thank you very much, Rob. We covered loads of ground. I really appreciate it.